Hi, good afternoon. You're watching the newsroom on ET Now. I'm Anisha Jain. For now, the market has stabilized a bit, and I say that because we're close to 22,350. So yes, we're off the highest point of the trading session, but from the lows as well, we have managed to recover quite meaningfully. In fact, for the banking index as well, we're just seeing a cut of around 20-25 points, and bulk of that move is actually solely on account of HDFC Bank. Because the rest of the index constituents are actually in the red right now. It's only HDFC Bank from the frontline index and the banking names that's actually managed to hold on to the green. TCS, LTI Mindtree, Infosys, these are the other names. So clearly the IT pack is outperforming while metals are coming under pressure. So Hindustan Copper, Analco, Tata Steel, all of these stocks are in the red. You also have ITC, which is under pressure, and SBI too is in the red. From the broader markets, just wanted to highlight a few more names before we move forward. Take a look at Linde India. That stock is up 8%. A lot of news flow there, a lot of traction over the last 5 days. That stock is up almost 15-20%. HEG is the other one, which is up 4%. India Mart, wherein Jeffries came out with a fresh note, is also higher by 4%. And Torrent Power also continues its up move. Yesterday, the stock was up a good 6-7%. Today, Torrent Power has added more than 4% as well. So, good gain across the board. On the losing side, watch out for Pesalo Digital, that RBI, RBI probable inquiry around false claims and loans is something that might be weighing heavy. Swan Energy after its QIP is down, and Keynes, Infibeam, Godfrey Phillips. These are some of the names, and the individual charts will come up for you on the screen shortly. So all of these stocks in focus: Swan Energy, Infibeam, Avenues, Keynes, Pesalo Digital. These are the stocks in focus, and of course at the bottom of your screen the latest coming in as far as the North Class 8 truck is concerned, because ACT has released the data and it seems that they've raised the sales estimates for the year. Of course, it augurs well for the likes of Bharat Forge, Samil, etc. So we'll watch out for some of these names in the trading session if they are reacting at all. Let's pull up the intraday chart of Bharat Forge. Not a big reaction as such, and even Samil or Samvardhana Motherson Sumi at that hasn't reacted too much, I think, but nonetheless these stocks continue to be in focus. But let's bring it, let's take the discussion forward, and we have Santosh Singh, the head of research from Motilal Oswal AMC, joining us on the show. Good to be speaking with you. Thanks so much for making time and speaking with us. Just wanted to begin the discussion, Santosh, by asking you about the automobile sector as a whole. I was going through your breakup as well for one of your funds, and seems like you are a lot more tilted towards auto components, electric manufacturing as well, industrial manufacturing. Which are the names, if you can talk about individual names, if at all, in terms of the manufacturing theme? And overall, what do you think about the manufacturing theme going forward? Because the risk reward is not as lucrative as it was 12 months ago.
Yeah, I would agree that yes, it's manufacturing as a theme. The government is working and they want it to work, right? But the valuations, the way they have gone up, uh, it's not as lucrative as in the past. But in my portfolio, I'm so on the manufacturing side, I'm more bullish on sort of auto comps, which is a significant portion of my portfolio. I'm quite bullish on sort of autonomous vehicles. In next 5 to 10 years, I'm more bullish on technology on vehicles, and that's why a lot of companies you will find in the portfolio, something like a Samil or a ZF, which are into autocom space. So I am quite bullish on that space. But yes, specifically, if you are talking about PLI linked sort of manufacturing, I find the space to be still, so the companies might do well, but the valuations are so high that I find a little bit difficult to sort of get into that space.
This is a problem across the broader markets right now, no? But nonetheless, Santosh, I see that you're quite positive on IT or technology as a space. Are you not worried about the underperformance that might continue for another 6 to 12 months?
So see, when actually the stocks for last 3-4 months are doing better than what I thought, because the index is doing better. But see, these are the reason that call is in the portfolio is that simply I believe that the global interest rate environment might get we might see a decline in the global interest rates, and that's going to be quite positive for the IT sector. It's a macro linked sector as a whole from that point of view. And the valuations of the market itself are not giving me a lot of comfort to get into too many cyclicals, you know. So I'm trying to avoid that part of the market, which is too much of cyclical given the valuations and the way it has run out.
The ways how you're managing to not get into cyclicals is also, being in exchanges, because I see quite a few names within your small cap portfolio at least. There's MCX, there's BSC as well. What's your view within this entire, exchanges and the platforms as a whole? Because right now BSC is of course coming under pressure because NSE has gone ahead and cut the transaction charges, and the street is worried that BSC will follow suit. But fundamentally, what's the thesis on some of these exchange names?
So see, if we are looking, we are quite bullish on capital markets, right? So the volumes, if you look at the volumes in the Indian market, that's growing at a phenomenal pace. And this entire, and if you look at, say, 5 years back and today, or 10 years back, when FIIs used to drive the volumes in the market, and currently the volumes are driven more by retail sort of trading volumes on mainly on the option side. So if I compare these two, right, clearly what seems to me that the capital market space is quite lucrative, and that's why we have some positions there. Uh, because we still think that the space is not that expensive. Because if you look at the stocks, those are not that expensive, and at the same time, point in time, so if the volumes keep on increasing, the sort of and then it's not dependent on the market up move or down move. Actually, if you are on the option side, and that also in the shorter duration, that's where the volume is. The upside or the downside of the market doesn't impact you that much.
Okay, interesting take. So capital markets is the theme that you like, and of course these transient issues keep on happening. But overall, just wanted a word on the market itself with you, because you have a lot of exposure to small cap, mid cap as well. There was that notice that came in from ANFI as well. There was this entire worry from even SEBI regarding small caps. It was a large part to do with SME, but nonetheless, there were these worries about small cap and mid caps as well. Are you increasingly finding it more difficult to deploy funds? And are you also looking at maybe, moderating the inflows into your AMC?
So see, firstly, if I look at mid cap, small cap, see, mid cap is a large space. I think when anyone or even SEBI would have talked about it, it would have been more about the areas where there are issues. But if you are looking at the growth in the market, it's mainly in mid cap. Mid and small cap is the area where there is growth in the market. Large cap is restricted to 100 stocks. And then the majority of the growth is in mid caps and small caps. We find, my personal view is that any correction in high quality stocks, because there are certain areas of the market I'm quite concerned about, clearly, because there are certain areas of the market where the valuations have gone high, and these areas are mainly in the mid and small cap. So that's why what you can say is that mid and small cap might do not that well, because they've done really well because certain sections of the market has done really well, but they might not do well. But what we are more bullish on is areas where you see good growth and the valuations have not gone up that sharply. So those are the areas where we are more bullish on. So not really concerned about exposures on mid and small cap, but yes, certain areas of the market I'm really concerned about where the sort of correction can be sharp, and which has gone up in last 3-4 months. And I keep getting a lot of sort of queries from my friends on the with whom I play badminton or with whom I travel, that and they want so those are the areas I'm really worried about, because there are no fundamentals and the valuations have gone up so sharply.
FOMO feeling that you are witnessing in a lot of people right now gets you a bit worried that the exuberance in the market is running perhaps without that kind of fundamental backing. Thank you, Santosh, for making time and speaking with us candidly on the sectors and the themes that you like and what is a bit concerning in the market, which are those select pockets in mid caps and small caps. Time now to slip into a very short break. Don't go anywhere.